Economist here, doing the live stream from Orlando, Florida. I'm here in the Hilton, getting ready to go down and hang out for the cocktail party preliminary to the Rebel Capitalist live event. So I'm really looking forward to seeing the speakers here in Orlando at the Rebel Capitalist live event. But I thought I would share a little bit of lumber speak with you guys, a little bit of lumber information. I know how much you guys like the lumber talk when I talk about the industry and what's going on with the things that I am seeing from the retail space. Now, I left a link down in the description for you guys. The title of this article that I'm looking at says "New Home," or I'm sorry, "How Home Builders Are Navigating Volatile Lumber Prices." Now, very interesting read when you go into this particular article. I left a link down in the description for you guys. It says, volatile lumber prices are once again rattling the U.S. housing market, squeezing builders and threatening to exacerbate an already dire affordability crisis. Dun, 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 right? So, if you go through and you read this article, it would lead you to believe that lumber prices are incredibly high right now, which is putting a burden on all these home builders. And it's the reason why you don't see as much new construction taking place, is because of how expensive all this lumber is within the system. Goes on to say softwood lumber prices in April surged 23% year over year, while futures rose sharply in early 2025 amid fears of increased U.S. duties and widespread sawmill closures across North America, according to the National Association of Home Builders. Right? Big more nightmare scenario that's happening there. Now, something I found very interesting within this topic is it says the lumber prices surged 23% year over year. Right now, we're sitting at about 600 per thousand. Now, for those of you who are not familiar with the lumber industry, lumber is priced out per thousand board feet. So a board foot is 144 cubic inches of wood, right? So however you want to figure that out, the easiest way to kind of understand a board foot is 1 inches thick, 12 inches wide, 12 inches long. That's one board foot of lumber. So when you're thinking about 1,000 board feet of lumber, it's literally 1,000 lineal feet of 1 by 12 that would be considered the amount of material that they're pricing out per thousand. So at 550, 600, I think we're at 599 is something like that. Let me look at real quick. We are at, where are we on lumber? Oops. Lumber prices right at this exact moment, 599 per thousand. Now, when you look at 599 per thousand and you think about what we had experienced over the last, couple of years here just recently, that seems pretty high. However, lumber peaked out at 1700 per thousand. 1700 per thousand. This was at the height of the pandemic with COVID shutdowns and stimulus checks, and everybody was wanting to run out of the city and move out to the country and build up a new home or remodel their house because they were going to be quarantined or secluded or social distancing, however you want to look at it. Buying all this lumber, remodeling their place, making their environment better, literally zapped a lot of the lumber that we had in the inventory during the time. And with that stimulus check, it literally wiped it out. We saw lumber run up to 1,700 per thousand. It was incredible. Way, way beyond what it is that the market would generally demand or create as far as the demand goes. Way, way off the charts. However, lumber peaked out back in 2018 at 650 per thousand. We're talking almost 7 years ago. 7 years ago, it was 50 per thousand higher than it is today. For somebody to say that lumber is expensive today, it's a very delusional statement. Lumber was more expensive 7 years ago than it is today. I worked the retail space. In fact, I had gone back and I looked at what I was selling 2x4s back in 2018. They peaked out at $4.29 for a standard and better 2x4 8-foot Doug fir stud, right? $4.29. back in October of 2018. That same stud at the height of the pandemic, we had a price tag on it of $13.50 for that same board. It was $4.29. Pandemic era, height in the lumber prices shot it up to $13.50 for a single 2x4 8-foot stud. Today, I sell that same stud for $3.89, cheaper than I was selling it back in 2018. For somebody to say that lumber prices are expensive right now is a very delusional statement. It is not expensive. If you look at lumber like over the course of say 20 or 30 years, yeah, there was a time when you could find studs at $1.50, you know, for that same 2x4 8. But today, that's not even close to reality. Okay? When you think about where it is that the demand for lumber is today and how much supply is coming to the market, 550 per thousand is about as cheap as it could possibly get. Anything under 550 per thousand in the mills shut down production. This is the reason why this article is even able to even state it, right? Let me bring it back up here. Where was it? Oops, come on. What did it say? It said the U.S. currently where was it? No, here we go. Softwood lumber prices in April surged 23% year over year, while futures rose sharply early in 2025 amid fears of increased U.S. duties and widespread sawmill closures. Well, really? Well, why were all those closures taking place? Does anybody want to look deeper into this article to find out? Oh, they don't say. No, they don't tell you why why lumber mills were shutting down production, closing their mill operations prior to 2025. All throughout 2024. I was reporting on it. There was plenty of you uneducated economist UE videos out there talking about mill curtailments and shutdowns and closures, warning that there was tightening up of inventory taking place and that the fact that 550 per thousand is not a profitable position for most mills to operate in, that at anything under 550 per thousand, and you're going to find even more mill curtailments and shutdowns taking place, because that's what was happening in 2024. Now, here we are. We got this article trying to claim that lumber prices are high and it's putting a burden on these builders. It goes on to say this. This has weighed heavily on major home builders such as Lennar, D.R. Horton, and Toll Brothers, which have all seen their stocks slump this spring. Whoa, is it lumber that did that to them? I'm just really curious about that. I mean, it's been 7 years since we've had this kind of price level on lumber, but yet all of a sudden now it's destroying these home builders, putting a burden on them? What a nightmare. How could this possibly be? All right. Goes on to say, though lumber avoided inclusion in the latest round of tariffs, so it isn't tariffs. No, not tariffs. Tariffs not the problem, right? Because lumber was excluded out of that. The Trump administration has signaled growing interest in tightening trade restrictions. In March, the White House issued an executive order directing the Commerce Department to investigate the national security implications of lumber imports and boost domestic production. Oh, I'm sorry. I mean, do you not realize that this is the same dispute that's been taking place with Canada for the last 3 decades? This isn't new. I mean, those who are trying to figure out what the hell is going on with the dispute between Canadian lumber and the United States and how they're dumping cheap lumber into the United States, this is a very old story. It's been something that they have been talking about for a very long time. Countervailing duties and the prevention of subsidized lumber from Canada being dumped into the United States, this has always been an issue. This was an issue that was taking place back during the first Trump administration, and it was taking place before his administration. It's taken place all the way back into the 80s. This isn't new, right? Now, beefing up to boost domestic supply, I'm still like curious on this. If lumber mills are shutting down production because at 550 per thousand they're not profitable enough, how is it you're going to boost domestic supply? Maybe if they charged a little bit more, or if the price was higher, the mills would produce more because that's how supply and demand works. 550 per thousand, they don't make money, they shut down operation, but yet somehow we're going to boost domestic supply with cheaper lumber? Because lumber's expensive now, right? And puts a burden on all these home builders out here. Yeah, gosh, that expensive lumber, them mills obviously, they're raping everybody out, just taking all the profits for themselves. Yet meanwhile, they're shutting down production, and this article actually refers to that back in 2024 because they simply weren't profitable enough. The US currently imposes 14.5% duty on Canadian lumber. It's been higher than that in the past. And Canada accounts for 85% of all US softwood lumber imports. 85% of the imported lumber that comes into the United States comes from Canada. 85% of that. Right? That represents almost a quarter of U.S. supply, according to the NHAB, what is that? National Association of Home Builders. Very interesting to think, right? So here you have less than 25%, which I think it's closer to 20%, but whatever, let's say it's 25%. 25% of the softwood lumber that we consume here in the United States comes from Canada. No, not even that. 25% of what we consume here in the United States, of that 25%, 85% of that comes from Canada. So really, it's probably less than 20% of what we consume here in the United States comes out of Canada. So let me ask you, if they were to double their production, how much would that really increase into the United States, considering that they really only represent 20%? If they could double their lumber production, how much are we actually going to consume here in the United States? Probably not a whole lot. Not a whole lot more than what we're already consuming from them. I mean, you think about it. Here, we're trying to figure out how to boost domestic supply, and yet the prices of it itself are not high enough to produce. Canada subsidizes their lumber. No wonder why they have so much of it and dump it into the United States. Goes on to say, the unpredictability of the lumber prices adds serious complexity to planning and budgeting. Well, yeah, I could see that at 1,700 per thousand it would be, but we're at 550 per thousand. This is about as cheap as it gets. How could it be trouble to bid this? Like it doesn't get much cheaper. It's been dancing between 550 and 600 per thousand for months upon months upon months. How volatile could it possibly be? When it used to be at 1,700 per thousand, and you would see wild swings, well over 100 per thousand, as it got close to the contract closing. Now, we're lucky if we see 10 per thousand, $10 per thousand moves, right? It's pretty small. All right, the unpredictability of lumber prices adds serious complexity to the planning and budgeting, said Steve Martinez, president of the Idaho-based Tradewinds General Contracting. His business builds high-end multifamily homes where wood frames are critical, accounting for up to 18% of construction cost, according to Home Guide. This is something that I found very interesting. When you think about 18% of the entire construction and cost of the entire home in the lumber portion of it, that's a lot. That's a lot. Yeah. And when I think about how much like $10,000 worth of lumber would be, like I can visualize it. I can see it sitting on a truck, $10,000 worth of lumber. And I'm thinking, well, $10,000 worth of lumber, like on a big truck, that's probably pretty close to building a house. Not an exact, but you got enough lumber in there, just the framing of it, not all the amenities or anything, just the framing of it. Yeah. Used to be about $5,000 now, 10,000. I could see that, on a smaller home. You can adjust the price of that newly constructed home by $10,000 just by simply changing the style of cabinets and flooring you put in. You know that? Like all this added cost that goes into lumber that could easily be absorbed or changed by the changes of cabinetry and flooring that you put into that house, you can make up the difference. Lumber is not the issue. Lumber is not the issue at all. Not by any means. This article tries to make it that way, tries to claim it that way, tries to use like tariffs and, all the ideas of increased pricing and stuff like that to manipulate your thoughts into believing that it's lumber that's causing the issue, but it's not. I mean, you could adjust, like I said, the entire cost of the entire home in the lumber package aspect of it simply by changing around the doors and windows and cabinets and flooring you put into the place. Beyond home building, higher lumber costs are hitting renovations, fencing, and interiors. Again, I think about to the prices that I was selling lumber for 7 years ago. It was more expensive then than it is today. How could it possibly be putting a burden on these people? Unless they have just the internal belief that the lumber prices are high and they really just don't know. And so therefore they consider them high and just take that opinion. They must be high. They're not. They're not even close to being high. The United States Forest Products Annual Market Review and Prospects found that U.S. lumber production inched up to 64 million cubic meters in 2023, up nearly 1% from a year prior. But demand continues to outpace supply. Does? Interesting. Because I see building permits dropping. I see new starts dropping. I see less homes being constructed right now on an annual basis comparatively to what we had experienced over the last couple of years. Now, granted, there is a lot of construction happening, and I know even in the comment section of this video, people are going to say, well, dude, you just need to get out of your area and go find another place where it's building more. Look at my area, it's kicking ass, right? I hear that all the time. I'm taking these numbers not from the view that I am having at the job that I work at. I'm taking these numbers directly from the Federal Reserve. I'm taking them from the National Association of Home Builders. This is where I'm getting the view from. I use my personal view from the inside view. What it is that I see distributors doing, what it is that I see wholesalers doing, what it is that I see the truck drivers and lumber mill operators doing, right? I'm not looking at the customers and saying, hey, where's the demand at? I'm looking at the production side, the industrial side of things. And I'm telling you, they are weak. They've been weak for a while now. Nearly 100 million US households can't afford a medium-priced home. Bang! That's the problem, right? Even a good job sucks. They can't afford it. Most people can't afford homes today. Nearly 100 million US households can't afford a median-priced home, which now averages $460,000, according to the NHAB. As affordability worsens, experts warn that higher tariffs, right? What tariffs? And ongoing supply instabilities, I have no idea what the hell they're talking about, could stall new development for years. Well, yeah, I guess especially if you have that belief. I mean, are you going to go start a house if you have elevated inflation expectations, tariffs in mind, and a belief that lumber prices are really expensive, and you're thinking maybe in the future lumber prices will come down and that will be my opportunity to build? Won't happen. Ain't gonna happen. Lumber is as cheap as it's gonna get. So to wait for better opportunity or thinking that there's going to be a better opportunity in the future with lower lumber prices and a better environment or something out there, that's not happening. That's not going to happen. If lumber prices get any cheaper, which is what this article is suggesting would happen in order for more people to go out there and start building, if lumber prices get any cheaper, you're going to find even more mill curtailments taking place. If there was a lot in 2024, there'll be even more going into the future if that was to happen. That's why I find these articles so I can understand if you don't see it from any other view than what it is that these people are looking at. If you don't work in the industry, right? If you're not, privy to the stuff that had happened over the last decade, right? Like very well aware of it, talking about the The blue pine mountain beetle up there in Canada destroying their forest industry, talking about the salvage mode that they had gone into, dumping lots of lumber into the United States, and then when lumber prices crashed back in 2018 from 650 per thousand down into the 300s per thousand, mills all over the place, not only in Canada but in the United States, shut down operations. This all took place prior to COVID. Huge inventory depletion took place during 2019 as many mills were shutting down permanently. Even up in Canada, I was reporting on places like 100 Mile, which is like huge forest industry. That's all they do. That's it. This is like logging and mills, and that's it. That's what they do up there. And the stories that were coming out of 100 Mile were just absolutely horrible. Listening to how generations of people who that's all they had done, it was wiped out, yeah, shutting down the lumber production. And again, this was in 2019. So when 2020 kicked in and all of a sudden there's lockdowns and the mills shut down and everybody got handed a stimulus check and all of a sudden there was this huge demand for lumber that started rippling through the market, it wiped out inventory. Well, if you have somebody who has signed a contract to build a house and there's no lumber available, that's inelastic demand. That guy is going to buy that lumber from anywhere he can get it for any price because he's under contract. He is forced to do it. That's how lumber prices shot up to 1,700 per thousand. It's because literally people were under contract to build. If you have elastic demand, meaning like, hey, I want to build a woodshed out in the backyard, you go down to the lumber yard, you realize, man, it's $13 for a stud. You'd be like, oh, maybe I'm going to postpone that project. Well, that's elastic demand. You can wait till next year or wait till another time or something of that nature. But if you had signed a contract to build, you're on, man. You're on. You got to go do it. And if you don't, you're gonna end up paying the consequences from, you know, failing to provide the contract, whatever and whatever problems that results from that, from not fulfilling it. This is like it's not surprising to me that I see articles like this coming out. What really surprises me though is that you cannot find anything that ever delivers you the truth of the matter. And that's where it really bums me out because I don't care if somebody wants to spread some misinformation. That happens all day long, right? I mean, I care about it, but like, what am I going to do? Nothing. I can't do anything about that. However, it would be nice if the appropriate and correct information was out there too, so that people could then judge for themselves what it is that they really need to be taking in. If this is the only article that you ever read on lumber, you'd be convinced that lumber prices is high, that more production needs to happen, that if it was cheaper, then there would be more building taking place. All of that it's not real, man. It's artistic fantasies. It's not going to happen that way. Even the idea of mortgages, right, going down. Like I came across this article. It was a Fannie Mae forecasts, what was it? Sharp dip in mortgage rates by year end. And I'm thinking, whoa, how in the world are we going to have lower rates at the end of the year? I mean, it's not going to come from the Federal Reserve. We already learned that. Fed lowers rates, mortgage rates went up. So even if the Fed was to start lowering rates, I don't know, that's not going to be the reason why mortgage rates come down, right? Because there's no evidence of that. I mean, since the Federal Reserve started lowering interest rates, we saw mortgage rates ticking up, not go down. They went the opposite way. So, what is it that Fannie Mae could possibly anticipate coming into the future that would then lower rates? Okay. It says this: Fannie Mae expects 30-year mortgage rates to end 2025 at 6.1% and fall to 5.8% by the end of 2026. I don't really consider that a sharp dip. Like that seems like a kind of a gradual decline. Am I right? Like, I don't know. Maybe to some other people, that might be a sharp dip. To me, that seems like a gradual decline. Uh, um, in 2025, according to the company's May economic and housing outlook, in April, the mortgage giant had forecasted that the rates would dip to 6.2% by year end and 6% by the end of the next year. So their forecast has actually come down from what it was just back in May. They are believing that there's going to even be more interest rate drops coming in the mortgage market. Right? Now, again, I have to think about this just like, what is it that you could possibly be seeing out there that would give you this inclination? Goes on to say this. Rates have a long way to go to reach the predictions made by Fannie Mae's Economic and Strategic Research Group, according to the Freddie Mac. The 30-year fixed mortgage averaged 6.8% last week. The 10-year Treasury note yield is predicted to fall 4.2% during the second quarter of 2025. Right? The 10 years is supposed to fall down to 4.2 in 2025 and remain near that level for the remainder of the year, according to Fannie Mae. The 10-year yield, which closely correlates to the 30-year mortgage, eclipsed the 4.5% mark this week and touched 4.6% on Wednesday, following the news that Moody's rating had downgraded the U.S. government's long-term issuer and senior unsecured debt ratings. Now, again, I'm still thinking about this as far as what it is that they are predicting out there that would generate the dropping of mortgage rates. Right? I mean, they have this assumption that the 10 years is going to go down, but they don't give any reasoning for it. Right? I mean, I assume all kinds of stuff. What difference does it make what I assume? Right? I mean, why don't you give us some reason, some logic behind it? And I'm going to be there at this is what I think. Well, why? You know? Fannie Mae also forecasts that the benchmark federal funds rate will remain within its current range of 4.25% and 4.5%. So they don't expect the Fed to move, but they do expect mortgage rates to move. Interesting. Okay, so the Fed doesn't have anything to do with this part, right? Because they're going to keep their mortgage rates right where they're at, right? Within this range until the fourth quarter of this year, when it will fall to around 3.9%. So at the end of the year, they're going to drop it down to 3.9. Is that what's going to do it? I mean, Fed moves rates. It takes 6 months to a year, right? I'm sorry, 6 months to a year, right? Before you start feeling the impacts of it. If they drop interest rates at the end of the year, it's not because of them and their adjustment of interest rates that is creating the downward shift in mortgages, right? It can't possibly be that. There's a lag. So again, they still haven't come up with a reason or an idea on why it is that they feel that interest rates will be going down. Doesn't make any sense yet. And I mean, again, this is an article that some dude wrote. So, I mean, just because he didn't put it in there doesn't mean that they're not explaining it themselves. He's just that in this article trying to convince people that Fannie Mae is trying to say that there's going to be a dropping of mortgage rates going into the future. It would be nice to know why. Right? It would be nice to understand why it is that they feel this way. And if they're believing that it's because of the Fed funds rate and the dropping of Fed funds rate at the end of the year from the current 4.2545 down to 3.9, that ain't going to do it. There's a lag that's involved with that. So you got 6 months to a year before you start feeling the impacts of it. Not going to happen that way. Fannie foresees a corresponding uptick in single family home sales as mortgage rates fall. Okay. So you say, I mean, still don't understand why the rates would be falling. The company now expects sales to reach 4.92 million units this year, up from April prediction of 4.86. So they expect the housing market to start getting more sales, right? Which the crash in the housing market wasn't in prices, it wasn't in all the stuff that people were saying. The housing market crash was in sales. Right? Not in price, not in more like all that other stuff. No, that's not where the crash was. The crash was in transactions. That's where the crash happened. All right, mortgage Originations are expected to rise 1.99 trillion in 2025 and 2.38 trillion in 2026, up from their previous forecast of 1.98 trillion this year and 2.33 trillion next year. So they're seeing a hotter housing market going into the future. I mean, I wouldn't necessarily call that hot, but it's hotter than it has been, right? At least by their predictions. And still, they don't give any real reasons why this is going to happen. They don't give any kind of real understanding of what's going to happen within the mortgage markets that would then deliver a cheaper mortgage. They just go off of their assumptions, or at least the author of the article is just using assumptions, right? Because there is no logic base behind it. Those rosy housing predictions stand in stark contrast to the recent comments by Michael Nsinga, did I say that right? CEO of the First American Properties, who cited a combination of rising home inventory and declining pending sales as a sign that the U.S. housing market may be facing a correction. Absolutely, that's where the housing market crashes. It's in those transactions, exactly what he was saying. Right? People are anticipating it being in prices or something of that, which I guess it could manifest itself into that, but ain't happening yet, right? It happens somewhat in some areas, but even still, what the prices are falling to are still far higher than what the average person can afford. So even a good job still sucks, even with cheaper house prices that have come off the market here over the last year or so. Like if you had a $500,000 house that went up to $650,000 and now it's selling for $585,000 because it took $70,000 off the price tag, better than 10%, it's still way higher than it had been, right? That's a huge number to drop off the price tag of a house. 650,000 down to 585, that's a big drop. But it's still $85,000 more than the house was selling for just a few years ago. That's the problem that people are facing. They're seeing these numbers fall, but where are they falling to? They're still falling to a number that's far exceeding what it is that the average person can afford. Let me finish this article here real quick. Let's start reading some comments. All right. When we examine the historical patterns of housing downturns, the trajectory we're on aligns closely with previous deep national corrections. That's what he's anticipating. Deep national correction. Among key economic indicators, Fannie Mae expects real gross domestic product, GDP, to grow 0.7 in 2025 and 2% in 2026, up from 0.5% and 0.9% in its latest forecast. Um, I just find this, I mean, when you think about what it is that has created the situation that we are now in today, and you think about where it is that mortgage rates are at, where they're headed, and how the demand for homes still exists today. Because see, this is something that I don't think a lot of people take into consideration is that, in fact, let me look it up. Let me just bring it up here real quick. Since I have access to the internet here, let's, um, oops, what's going on here? Okay. Let's see here. Do we have any recent news? March here. Let me adjust the tools here. Time. Let's put it in the last month. All right. Let me see here. Where's Housing Wire? Let me see. Is that the one? Okay. Cash home buyer companies in 2025 purchasing a home and okay, ban a home. Cash is king. New American Fund reveals 10 states all cash buyers. Okay. Existing home sales recorded 5.9 in March. Number of U.S. households cash 20. Yeah, see, these are old numbers. It's probably going to take a while to get to the 2025 numbers to get something that's a little bit more up to date. But if you go and you look at some of the issues that are now plaguing the real estate market, one of them that I just don't think a lot of people take into consideration is the number of houses sold for all cash. Like they don't care what the interest rates are. They want to know what the price is, and that's it. They could care less. The interest rate could be 2% or it could be 20%. It wouldn't make any difference to them because they're buying all cash. Right? These people are more prevalent in the market now than they have been in just about all of history, going back to the late 80s, early 90s. Here it's, I'll show you. I gotta, all right. There's the graph right there. I mean, it's backwards, so it's like, over here, this is where it's exceeding. But if you look at that, I mean, there was a time back in, say, 2005 that it was kind of close to where we are today. But that was an anomaly back then. Right now, like it's been the last few years, it's been so many more cash buyers in the market. Like you think about it, this graph is backwards because my damn camera's mirrored. So this is back in the early eight, or what is that, 1988. Right. So this is back in the early 90s right here, and this is like current. This is all cash buyers. Like there was a huge drop in the all cash buyers. Very not as many people buying in all cash. Well, now you see that's ticking up dramatically. It's come down a little bit over the last couple of years, but it's still so much higher than it has been over the previous decades. I mean, take that into consideration. These are people who are paying all cash for their home and they can care less what the interest rates are. They're willing to buy at this price. Lots of them. Lots of. Okay. This is why I find it very interesting when people say, "Oh man, they just can't afford these interest rates. They're going to be coming down." And I'm like, "Yeah, I'm sure they will a little bit, but look how many cash buyers are jumping into the game, right?" And these are people like you think about it, property ownership and capitalists. These are the people who are creating the inequality. Now, they're not doing it on purpose. They're just trying to make a better life for themselves, just like you and me would want to do if we bought a house or if we started investing into stocks or businesses or anything else. When we start doing that, the people who don't do that, we separate ourselves from those other people out there. This is how inequality is growing in this country, is by literally people, all cash buyers, getting into the or getting into the real estate market. And they're separating themselves in a dramatic fashion. Inequality is getting worse by the day. Like that's not going away. You're not going to find anything within an administration's capabilities to lower the inequality that's happening. Like that can't happen. The only way that could happen is to literally cause pain and misery and suffering to the people, and you would find that inequality could come down. But it even really wouldn't be inequality coming down. It would just be less rich people up there, but the rich people who stayed rich would be far richer than everybody else would still be. There's no winning this game, right? You can't win. The only thing you can do is play the game better than anybody else is playing it, because there is no win. You can't win. Okay? The win for some people would be pain and misery for others. Okay? That's the problem that I think a lot of times people say. They would be like, oh, we would be so much better on a gold standard. No, you would be, because you understand the gold standard. You understand that being in possession of gold. You understand business cycles. You understand that. Most people, like 99% of them, have no clue. Have no clue about any of that stuff. And if we were to swap ourselves over to a gold standard overnight, those people would find themselves in pain and suffering and misery, and they would beg the government to do something about it. All right, let's read some comments here. Jerome Powell is not cutting interest rates because he knows that this is keeping Trump awake all night. Well, Pedro Diaz, I mean, I like the comment, but like Powell doesn't have anything to do with this, right? Powell is a messenger. Like if some dude came in and says, "Hey man, I got some bad news to tell you," you go, bam, you shot him. And you're like, "Don't tell me bad news." Did that change the bad news? Right? Of course not. Right? You can't shoot the messenger and expect the message to change. So Powell is not in charge. Powell doesn't control. Powell has control over one vote, his vote on the FOMC. And then when he comes out and starts talking, he is talking on behalf of the FOMC. He like you swap Powell for somebody else, you like you got rid of Powell, put somebody else in there, nothing changes about the FOMC except for the person delivering the message because you know that's what they do. That's what the chairman does, delivers the message. Um, All nighter, no tax would be way better. What's up, guys? What's up, putz? Current administration is actively reducing taxes on the top 2%. In the 30s, fully 50% of people that refinanced their distressed mortgage in the beginning of the crisis lost their homes before end of 1940s. Before end of 1940s. You want to hear a really good story, guys? I've done this one in the past. You remember the Sears and Roebuck's kit homes? Like they would deliver you a house and it was in pieces and all you had to do was assemble it. Everything was pre-cut, ready to put into place. Like you didn't an individual with limited carpentry skills could put one of these houses together. There was an instruction book and every single piece right down to the doorknobs was came in this kit, delivered right to the job site. Now, pretty interesting how this went down, right? Sears was providing people with the ability to build a home. Like people who didn't know how to build homes could build a home and they weren't bad. Like they were like a lot of people kind of made fun of them, but I've seen some of these Sears kit homes. They're decent homes. They're nice. They're cool. Okay? And so now people have this ability that if they had a plot of land, well, they could get this kid home, they could build their own home. This was a great idea. In fact, you could take this idea and run with it today. It would work today. Okay? And people were loving it. Now, there was a lot of companies out there like Sears who were building these kit homes. But Sears was doing something that was way different from all the rest of them. Sears was offering financing. Okay? So even if you couldn't afford the kit home, well, they would lend you the money. You could buy the kit home and you could pay them back and you could have your own home. And this had a lot of people participating in the building of their own home using Sears and Roebuck kit homes and their financing. Now, something interesting happened when the economy turned bad. See, they were selling these homes like crazy and people were loving it and they were building them up. They build this home and now they're starting to make payments on it. Well, if you can't make the payments, what happens? Repossessions. This turned into a political PR absolute business nightmare for Sears. Right? All of a sudden, they're foreclosing on tons and tons and tons of people's homes. Right? Here they are. They put their time, their effort, their energy into assembling a house that is now getting repossessed. Like Sears got full advantage of all that free labor. Right? See, this is the problem that a lot of times people look at, well, why don't they just do like then, right? Why don't they just offer up something of like the past and not realizing that that story right there is very rarely told about the Sears kit homes, those Sears Roebuck kit homes. Very few people talk about how come it came to an end. They didn't realize that Sears had to foreclose on hundreds, if not thousands and thousands of people's homes, repossess their hard work, right? Everything that they put into it, and only to have to essentially sell it off to somebody else. Right? Yeah, I could see where like a lot of people would be really upset with this whole situation. All right. Brody says if you just tax high income brackets, the rich tend to find workarounds to avoid it. You're absolutely right. And the very, very wealthy don't rely on income anyway. Yep. Yes, Brody, taxing the rich never works. Exactly, Brody. What happens when life becomes unaffordable? Yeah, and see, that's just the thing. Like, I totally agree with that. All taxes, all fees, all payments, all stuff is all paid by the working class. There's only two people: people who work and produce, and then people who consume. And if you have put yourself in a position of being the consumer, right, where you can just consume all the time, that generally means that you're a capitalist, property owner, something of that nature, because you have this abundance of money that flows to you, right? Now, when you think about it in this fashion, you're not producing anything, right? You might have produced something in the past, took your efforts and then reinvested that into, production of something out there, and now you're getting compensated for that. So you feel like you put a lot of hard work into it, but you're not producing anything, right? Like, I even have to say that myself. Like, I don't produce anything. I produce video content. I do sales. I take information from one direction, I send it over to another, but I'm physically not producing anything. I don't assemble anything. Okay? I used to assemble houses. I used to do all kinds of things out there that I had a product that would be at the end of my day. Right? I built this thing and now I'm selling it or something of that nature. But now I just do literally, I just relay information. You know? And so when I think about it in this fashion, it was just like you have people who produce and then you have people who consume, right? And so I would like to think that the production of my content, the efforts that I put out there are going to be somewhat helpful, useful, and beneficial to the people out there. Like, I do appropriate sales, I do the right price, I do, the time of it right, and everybody gets to make money, right? I make money, contractor makes money, the customer makes money because now they have a product that was built, their house is worth more. Like, everybody gets to make money off of this. So I do feel that I am in somewhat of the production fashion, but I'm just a relayer of information. Right? So let's think about it from this fashion, right? How many people out there are producing all the stuff? All the stuff that we use, right? I'm in a hotel room. There's all this stuff all around here, right? People had to assemble that stuff. People had to ship it here. People had to put it into place. People had to do all this stuff in order for it to be here and doing this. Those are the working people. They are making the existence happen. And then there's other people who are saying, I will pay for that. Right? And this is essentially the two different types of people that we have. So, if you're taxing one of them, like the person who's consuming all the time, right? Well, that's just going to be a burden that they put eventually down on the workers. Sorry, I can't pay you as much, can't pay as much for that stuff, not going to buy as much of that stuff, all that other, that comes from it. It all comes down to the burden coming down onto the worker. They're the ones who end up paying the price for it. Either they can't sell their product or they can't sell it for as much or they got to take a cut for it or something of that nature. Man, but they're the ones at the end of the line. All right. Let's see here. All Nighter says generating wealth is the product of creating useful value. Yeah. Taxing wealth would be to say, don't create useful value. Yeah. I totally agree with that. Like, I don't know how many times I've heard people say, oh, just tax the hell out of the rich, just tax them bad, make them pay their fair share or something like that. And I'm thinking to myself, one day I would like to be rich and I don't want to be punished for doing that. Like, I would like to be able to feel like I am doing something helpful, useful, and beneficial to the world. And if somebody says, dude, you're a jerk for working that hard and being that profitable and getting that much, you need to pay. In fact, you don't deserve that. In fact, don't even try to do that because if you do, we're going to punish you for doing it. Like, this is like, that's the mindset? And I'm like, no way, man, that can't possibly be. I look at I'm here at the Rebel Capitalist looking at these guys who are kicking ass every single day out there, just making it, sharing their experience with everybody. And I'm thinking, man, I want to do that. I want to be like that. Like, that's the kind of thing that I want to share in my life and have for my life and experience in my life. And if I get there, I don't want somebody saying, dude, you're a jerk for doing it. I want to be like, well, that doesn't make any sense. I don't think those people are jerks. They're awesome. Right? They're here sharing their wealth of information with us so that we can make use of it for our lives. There's nothing but positivity coming from that. And anybody who says any differently is really actually damaging themselves, believing that they are going to forever be punished for being poor, right? Because that's the way they feel. If they're being punished, then they need to be punished. So punish the rich, right? And that's the sad part about it. All right. People did not get rich by mistake. They know how the economy works and take advantage of all. Yeah, sorry guys. This is as good as the data gets. Maybe if I switch it over to Wi-Fi, we might be able to do better. Maybe tonight at the cocktail party. Yeah, that would be fun. All right, Jerome Powell cut Simon's internet access. Yeah. No. See, that's what's funny about it is somebody said something about like, dude, you got to be careful. You're gonna get like canceled out or something like that. And I'm thinking to myself, man, I am not that important to do that. If somebody was to like actually try to cancel me, I think it would make the information that I have been delivering that much more like important, right? Like literally trying to shut me up to keep from spreading this information. I don't know if that's really going to be like, an issue for me at all. Um, but I could imagine like at some point being in a discussion with the monetary policy uh, policymakers, right? And like the idea of it is something of like the nature understanding the monetary policy from a working class point of view to what it is that the people are actually experiencing from the monetary policy. Because most people look at the monetary policy and think, okay, well, interest rates are doing this. But very few people are saying, well, your delivery of the message that you have done has created this sort of feeling within the people, right? That is really where the information is most profound for the Federal Reserve, is how it is that they are communicating. See, they know that most people don't listen to them. Like no, most people don't listen to the Federal Reserve. You have to be like purposefully like paying attention to get any kind of information from the Federal Reserve because most people have no idea what the Federal Reserve is. They have no clue about Jerome Powell, and they certainly don't understand anything that's coming out of his mouth, right? So the Federal Reserve knows this, that they can deliver some information, and most people are not going to receive it. Right? So if I was to sit in a discussion with them, it would be how it is that their delivery of their information is being absorbed by the working class. That's where I think like I would probably have more understanding, better understanding of that position than just about anybody else. Because most of these bankers out there, they've never lived a real world in their life. Never. They don't have any idea. Like some of them might have an idea of it, but for the most part, these guys grew up in, rich Ivy League schools and shit like that. They like some of them might have been bussing ass at a dairy farm or, doing construction in their life or, working retail somewhere when they were a kid or something like that, but that's a very, 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 very small chance, right? These people have no clue of what it's like to be in a working class position. And so to try and like understand how their monetary policy is being absorbed by the working class, they wouldn't have a clue. They would literally have to do like a year-long psychological study and then read that paper to understand what it is that's happening. We understand it in real time. We just sit there and listen to them, and then we absorb the information. And we have a better understanding of how that information is being delivered to the working class and what it is that the people in the working class are going to do with that information better than they do. Right? We know it better than they do. Because, see, most people don't understand monetary policy. And since they deliver information to people that they're looking at and they think, well, they don't have monetary policy, they don't understand it. And so, therefore, they're sitting there looking and observing, trying to figure out whether or not they even clued in on it. Where we're sitting here going, well, you know what those people think over there? Because I sit in this conversation with them all day. They seem to think that, whatever, I can just lay it out, whatever story that you want to hear, You know how many people come to me and it was just like, these tariffs are killing your prices. And I'm like, okay, no, they're not. Right? I work retail. I sell this stuff every single day. Literally, the only thing that we have had move up in price so far was some nails. and it moved up like 10%, right? So the $100 box of nails now sells for 109.99, right? I mean, it literally moved up $10. Nobody noticed, nobody cared, and everybody seems to want to talk about lumber being high, all right? And I'm thinking to myself, okay, let's go around into this retail space. I went right to my buyer, right, who buys all the stuff for the store. Right? He buys all the stock material, all the hardware, all that other stuff. I said, quick, dude, name three items that have moved up in price outside of those nails over there on that shelf. Name three items that have moved up in price on account of tariffs. Crickets. I couldn't get anybody, nobody in the store. We're all salesmen. We all sell hardware. We all sell lumber. We all sell this stuff every single day. I could not get anybody in the store to name three products that have moved up on account of tariffs outside of them nails. Right? But the customers, oh, every time they go to put the card down, like, put the cash down on the table, oh, these tariffs, man, they're causing these prices to move up. And I'm thinking to myself, no, they're not. No, they're not. You saw that on the news, and now you've incorporated that into your belief system, and now you're delivering that belief system to me, which is inaccurate. Okay? And then when I read articles like this on lumber, like what I shared with you earlier, it's no wonder why these people feel this way and believe it. You know? All right. Okay, it's cool. I'm glad you guys are back. I must have lost connection there for a little bit. All right, Infamous NYC, thank you so much for the $2. Never educate the people you want to dominate. Oh yeah, for sure. And that's one of the reasons why I think I just don't live in fear. Like people are like, "Oh man, what about, Klaus Schwab and you'll own nothing and be happy?" And I'm like, not me, man. That's not like I already own nothing, so that's cool. That doesn't scare me, right? It doesn't scare me at all. Not at all. Yeah, I mean, I don't know, maybe it's because I have a better understanding of the system of the economy to then, not have that fear and anxiety and uncertainty about owning nothing and being happy. Like I don't have that. Like that doesn't exist in my belief structure. It doesn't exist in my plans. It doesn't exist in my future. Right? It just simply does not exist. However, other people want me to make it important in my life and say, hey, no, you got to take into consideration that you need to live in fear, that you will own nothing, and that you're going to try and do this to make you happy or something. And I'm like, no, that's okay. You can keep that. You can have that. You can dwell on that. You can make that part of your life and all that. I'm not going to do that. I'm going to go off and actually try and do something more productive with my life than to sit around believing that there's going to be some entity coming down who's going to take everything from my life and, force me to live like a slave. That's my own belief system that would do that. All right. All nighter. We saw some big bugs by the food truck, and we're joking that Klaus Schwab was there. Nike shoes about to go up due to tariffs. Yeah, I hear Nike's about ready to start selling directly through Amazon again. So, maybe they'll save a little bit of money on that. Just saying, we don't know about the workarounds, the exemptions, however it is that they're going to deal with the fact that there's tariffs. We can believe the credible threat of tariffs, just much like the Nike, right there, right? But I'm already seeing how Nike is now moving back to Amazon and selling direct through Amazon. So I'm thinking, well, they're going to save a little bit of money, right, doing that instead of going through a retailer. I mean, if you don't have to pay some kid to put it in a box to take your money, and you don't need to pay for a big brick and mortar store, and you don't need to pay for all the inventory, and you don't need to pay for the electricity and insurance and all the other stuff that comes with it, then you should be able to save a little bit of money. That ought to, offset the tariffs. Uh, buy the food truck, you mean? All right, the financialization of America is generally the last stage. Maps is saying we're 50 minutes away, by the way. Oh, right on. Well, maybe if we keep the stream going long enough, you guys can see all nighter come in. All right. Simon, the working class invited to the FOMC meetings. Are you serious? No. Actually, I'm not serious about that. That's why I kind of said it in a facetious way. Right? That's why I'm not scared. I'm not scared about any of this stuff, right? And when I said that if I was to sit in a meeting, that's the position that I would end up holding. I can't offer up what it is that there's a solution. There is no solution to this stuff. You can't, like, what's the solution? I mean, that's like a kind of a, that in itself is like some kind of dream, like a dream state of being that would never exist. Because think about it, even if it was perfect for me, it wouldn't be perfect for you. And if it was perfect for you, it may not be perfect for me. So what's to say what is right or wrong? You can't. You can't possibly say that, they did it right, they did it wrong, or, however. I mean, you can say it all you want, but I mean, if you've taken that opinion that they should have been doing it a different way, well, then you're taking an opinion that they should have been doing it your way, right? Your way would have been right for you in your outcome and everything that you got going on, which is great for you, but what about everybody else? Like, you want to come up with a solution, an idea, you can't come up with one that's just made for you. You have to make up one that's made for everybody. And since not everybody is suffering right now, what you would end up doing is creating an environment that would benefit you, but then make other people suffer. Maybe that's a good thing for you. I don't know. Maybe it is, maybe it isn't. I don't know. Me personally, I don't take that kind of consideration. I look at what it is that's going on out there and I try to figure out what it is that I need to do in this environment with the current situation, with not changing anything, whether it does change or doesn't. I'm not in charge of changing things, so therefore I don't look to change anything to my benefit. I need to look at what's going on out there and change the way I feel and believe about what's going on within the system so that I can make the most appropriate decisions for myself. That's it. Anything outside of that, and you're going to suffer in pain. That's all. I mean, because you can't fix it. You can't fix it. That's just all there is to it. You can't make it right for everybody. Even if they were to make it right for you, it's not going to be right for that dude over there. And if it's right for that dude, it may not be right for you. So what's the point of trying making it right? It's better to try and figure out what it is that's going on and position yourself for it. Um, what does this say? Ownership solves the perpetual slavery we're all under via taxation and debt-based currency. Yeah. And, even being in the debt-based currency, I think it's a feature that you could take advantage of. I mean, honestly, it is. If you could borrow money to buy cash flowing assets and then make a bunch of money off of borrowing money to buy cash flowing assets, that's a hell of a cool feature, right? That doesn't exist in a typical fiat currency system or a hard currency system. It does to some extent, but essentially, if you put out more debt than there is money, somebody's going to end up suffering, right? But here in a fiat-based currency, you can issue out as much debt as you want. Oh, to some extent, right? But there's no limit to the amount of debt that you could possibly put out there. And then if you can use that debt to buy a cash flowing asset, now you're sitting in a position in which this debt based fiat currency is like, way awesome for you. The conversation is how to keep the system going, not fix it. Justin, I don't even think it's about how to keep the system going because the system can't go on forever, right? It's better to just understand that you are needing to take a position in accordance to what it is that you know, what it is that you have learned, what it is that you have going on in your life, and what it is that you have need for your future, right? But also to take into consideration that it could all collapse, and that if it does collapse, how are you going to deal with the collapse? Are you positioned to be outside of a third party claim? I mean, if you find that the banking system starts to crumble and the government starts to crumble, what is it that you have positioned yourself to deal with that sort of environment? Because that's important. Like, you're not going to be able to maintain a crumbling system. Like, you might be able to. We keep the pieces going. This is what essentially we're doing. But if you have an insurance policy like gold and silver sitting on the back shed somewhere or whatever, just hidden away from sight, that you're not necessarily like, focused in on moving up $1 million or something like that, but just literally sitting there waiting to be deployed in case the shit hits the fan. Now you're outside of the system. Now it gives you a much better way of dealing with the system. All right. See, this is what's important. Like, yes, you can try and maintain the system. That's what this whole thing is all about. I try to figure out how it is that they're maintaining the system and then try to find what it is that I need to do in order to position myself on account of that. Okay. But ultimately, like, we can't maintain the system forever, so you do have to take into consideration that it will fail. And if it does fail, are you positioned to deal with that? Okay. And then once you have positioned yourself to deal with that, you can almost forget about it and say, okay, let's move back into what is really happening because it's not falling, it's not collapsing, it's not deteriorating to the point that it's no longer going to exist. It's still here. So we have to deal with it as if it's going to be here tomorrow. And again, just like you were saying, it's about maintaining the system, but you also have to position yourself that if the system did crumble tomorrow, that you would be willing to deal with that. Because you have to position yourself. That's it. Like you can't, there's nothing else that anybody can do for you. It's just you. All right. M Rider 777. In this kind of environment, do you think gold will go to 4,000? Oh yeah. Well, I mean, I could see gold essentially going to 10,000, but at what point and how far out in the future and, what is it that you're missing out on opportunities by buying into gold today? Like, you might be able to buy gold today for $3,000 an ounce and in 5 years sell it for $4,000 an ounce. Or you could buy a rental property and get rent off of that that far exceeds that of a gold coin over the course of many, many years or generations or, lifetimes of people. It's like, how is it that you want to look at the position that you want to take? Could gold go to 4,000? It can go to 10,000, go to 40,000. I mean, it could go all kinds of places. But to me personally, I'm not anticipating some big giant price move in precious metals so that I can become filthy rich and go and buy Lamborghinis or something with it. That's not the reason why I buy gold and silver. I buy gold and silver as to have that insurance policy away from that third party claim. It's what gives me the ability to sleep at night. People say, are you worried about having your money in the bank? No, because I have gold and silver. If the bank fails and collapses, if the government fails and collapses, then the gold and silver will hopefully be there to somewhat back me up. Now, have I taken a huge position in it? No, but if that sort of environment was to evolve where you have a collapsing banking system or government or something like that, then you're going to find gold and silver screaming to the moon, right? And it's probably not going to be a fun place to be in. People will be giving up their gold and silver for a handful of food because if you're starving to death, the gold, you can't eat the gold, right? If you're starving, you will give up that gold for any little bit of food. There's people who have done that in the past. In fact, we had a story of a guy who was from Cuba. And he wrote a story about that very thing, saying that as he was growing up in Cuba, when the Russians were there supporting and doing all kinds of stuff, they had this great infrastructure, all kinds of wonderful things happening. He talked about how the schools, the public schools, had these muffins, and there were so many muffins that they would throw the muffins at each other and have these muffin wars because there was just such an abundance of muffins. And then when everything started to collapse, all of a sudden, Cuba's in a bad position and everybody's hating life and poverty is just ripping through the entire nation and hunger is starting to really ramp up. His family had the few gold coins that they had hoarded away in case of an emergencies, and they got rid of those things almost immediately so they could get some food. That gold is gone so they could get some food. And it wasn't even that much food, he said. Because if you're starving to death, what are you going to do? You know? Like, you better be prepared to get yourself some food and hold on to your gold. Not use your gold to get food, because if you're planning on using your gold to get food, you're probably not going to get that much. Because if they know you're starving, it's going to be even less. You know? All right, my bling comes from the shine off my bald head. Almighty. All right. Gary, the funny thing about the credible threats is that it's kind of how the world works. Like when a parent says they're going to take away their child's game if they don't do something and the child doesn't do it. Yeah, I mean, I essentially that's like the credible threat idea that I have tried to really develop and share with everybody. I think it's more deep than just that of a crying wolf, right? Because a lot of people are like, well, once the Federal Reserve doesn't cry wolf anymore, or once they realize that they're what the people are, once the people realize that the Fed is crying wolf, then it'll all be over. And I'm thinking, no, that's not the way it works. See, like the story of the kid crying wolf is he was crying wolf when he didn't believe that there was a wolf there to upset the village, right? To watch, the entertainment of the villagers getting all frustrated with the idea that there was this wolf coming to town, right? Until the day that the wolf actually showed up and then nobody wanted to believe him. That's not the story of the credible threat theory. The credible threat theory is one of they will do it. Because they will do it, they don't have to because the people are acting preemptively. So understanding that if the people didn't do it, the Fed would, right? It's credible. It will happen. They are going to do this, right? There is definitely a wolf. However, because people know it, they've seen it, and they are acting preemptively, the wolf never gets released. Right? But if they didn't act it, then they would release the wolf. Right? And this is the difference, right? Because the wolf exists. Not like in the beginning of the story with the kid crying wolf saying, "Hey man, there's a wolf in town, but there really was no wolf." Right? This is actually the wolf is right there, right? And it will get deployed. And since people know it's there and they will know it gets deployed, they will start acting ahead of time before it happens, and therefore it never has to get released. That's the difference in it, right? So it's not like a matter of the people eventually figuring it out and saying, "Oh, the Fed is crying wolf." No, that's not like it. The Fed is not just crying wolf. The Fed has a wolf. That's the difference, right? And they will let it go, but they don't have to so long as everybody knows that they have it. Uh, Great explanation. Well, thank you, Gary. I appreciate it. Guys, I think of this stuff all the time. Like even on the flight over here, I was reading through Cantillon's essay, I was reading through speeches, I was reading the makeup strategy. Like I can't get this stuff out of my head. This is it. Everywhere I go, I think about economics. I think about what it is that's happening within the people's perceptions, how it is that they are engaging within not only their own transactions for themselves, but then also on the bigger scale of like everything. Like even on the flight today, the flight from Portland to Salt Lake City didn't have any kids on. I mean, there was a couple of kids. The flight from Salt Lake City to Orlando had bunches of kids on it, and I'm like, oh, that's right, Orlando, duh, Disneyland. Right? I was like, why are there so many like little kids on this flight? It didn't like, and then it dawned on me. I was like, duh, they're all going to Disneyland, bro. And it was just like that does make sense. That's the same. Like, it took me a minute to figure that out. Right? I was like, why are these kids going to? Oh, right. But it's the same thing. Like when I sit in a restaurant, I do the same thing. Like I look around to see who is sitting in the restaurant. Are these couples look like they're on like, a young couple date? Is this an old couple looking like, this is what they do every night for dinner? Is like they go out to eat? Is there, is this a family thing happening here where it looks like they might be out like, vacationing or something of that nature? All the people in the restaurant, even right down to the staff, like watching the staff work, how quickly they work, how frustrated they are, stuff like that. All this stuff is all economic data to me. Every bit of it. Like I can't go outside and not see it that way. It's like literally just data just flowing around me all the time. Just examples of it constantly. It's weird, right? I mean, I view the world differently than I ever had. All right. No, Gary, I'm talking about massive collapse where people can no longer buy $5 million 5 acre lots. And after, okay. Yeah, just go to the strip bar and talk to strippers. Absolutely. M Rider 777, that's probably like upper level understanding of economics is to be able to ask a stripper the right questions and to get the responses in order to understand what it is that's happening. If a stripper knew the economic information that I've tried to deliver here on my channel, if a stripper understood it to the level that I do, they would be like one of the best economic data analysis, positions that you could ever possibly be in. Like far better than anybody at any, you know, any of these big financial institutions and stuff like that, that girl would have far more understanding and data than anybody else would. In real time, like instantaneous. It was just like you couldn't even get it quicker than that. In fact, all those guys who study all that stuff, they have to wait for us to live our lives in order for them to read about it. Right? If we can see it in real time every day when we go to work and our jobs and our daily transactions and stuff that we do, we would be ahead of them. Right? And that's there's no lie to that. That is the absolute truth. Most people just don't see it. Right? They can't see it because they didn't study long enough or even care enough to understand what it is that they are actually witnessing out there. Right? Instead, what they would witness, instead of understanding it, they'll blame somebody else for it. Oh, Biden's fault, Trump's fault or something. They just because that's what you do when you don't understand. You blame somebody else. Simon, what do you think will happen to the economy if the tariffs issues does not get resolved soon? But that's okay. That hypothetical question, I think it's probably better to understand it in a fashion of what tariffs are actually going to happen after the tariffs are workaround, the exemptions, the all that other stuff. Like what to me, the credible threat of tariffs is already elevated, right? So it's not a matter of whether or not the tariffs are going to be there. The tariffs are there. Now the credible threat is being pushed out to the people on how less of those tariffs are actually going to hit. You see? Like 150% tariff, blah, 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 blah. Right? All these tariffs. Now you got to deal with all these tariffs in your mind. But yet, every single day, we're finding exemptions, workarounds, right? Postponements. This is the problem. Like we're seeing less and less and less and less tariffs every single day, all right, that are coming in. Even though the mind is stuck at, oh no, we got 90 days and then the whole thing is going to blow up. Every day they're getting less and less and less and less. Yeah. And then you'll find some article that blows it back up again. Oh no, he's not going to back down on that. Blah blah blah. Right, and then all of a sudden elevated tariffs again, and then work it down, work it down, work it down, work it down. Yeah. So, I mean, can you think of any areas, situations where credible threat theory is applied? Oh, well, I mean, I don't look for the credible threat theory outside of monetary policy because that's what I have focused in on for monetary policy. So if somebody was to say, hey, man, can you apply credible threat to another form of government rule or something like that? Probably, right? I mean, yeah, I'm sure you probably could. I don't do that because I'm not looking to take my credible threat theory of monetary policy and apply it to things that are out there that I'm not, that are not monetary policy. Like I was studying monetary policy and I'm trying to figure out monetary policy and I'm like, holy shit, they're using credible threats, right? This is how they're conducting monetary policy. And if somebody says, well, how about some other government like health, like universal health care or something like that. Are they using credible threats for that? And I'd be like, I don't know. Healthcare is way over there. I'm looking at monetary policy. Like I got credible threats in monetary policy. Like I don't know if they're using credible threats in other places because I'm not looking other places. I'm looking at monetary policy and seeing that they're using credible threats there. So could they use it in other places? Absolutely. I mean, even the idea of credible threats of tariffs have worked. That wasn't monetary policy, that was administration policy. The Federal Reserve didn't do anything about tariffs. They're sitting around witnessing tariffs, right? Just like everybody else is. The Federal Reserve didn't have anything to do with that. Now, are they taking advantage of the situation to increase the elevated inflation expectations so that they can raise the neutral interest rate and make their federal funds rate less restrictive on the economy? Well, that is working out pretty well for them, but I don't I mean, is that all part of the credible threat theory? I guess it could be, but I don't really look at the administration and what it is that they are doing as the monetary policy because most people think that, Donald Trump hates Jerome Powell, hates the monetary policy, hates everything about it, and yet everything he's doing really seems to be benefiting the monetary policy, elevating the inflation expectation, making the Fed funds rate less restricted on the economy as it raises the neutral interest rate. Like everything seems to work out very swimmingly for both the administration and the Federal Reserve with the ideas of the credible threats of tariffs. So I mean, that's another spot, I guess. Yeah. Uh, this is well orchestrated. Yes, it was. Credible threats have been used in military forever. Yeah, absolutely. And again, like, I mean, I don't try to apply the credible threat theory to other things out there because I'm not really looking at other things. I look at monetary policy. I look at monetary policy because 12 people, 12 voting members of the FOMC have more control over the entire lives of every single person on this planet than anybody else does, even more so, in my opinion, than Donald Trump or the President of the United States. Like the FOMC has that much power over the people. Yeah. I mean, and nobody knows who they are. And that's what's kind of scary about the whole thing. Hold on one second, guys. I need to get my charger out here. So, stay there. Don't go anywhere. Don't fall. Anyway. Let's get another question going. All nighter. Riggin. What is that? Rig and Rise? Rig, Rig and Rise? All right. Do you watch the What's Going On with Shipping channel? That's a great channel. You keep All Nighter suggests that one to me a lot. Sal is cool and funny guy. I would like to see him. I'd like to get him on this show. He said he's willing to. Yeah, that would be awesome. I would too, just because I think it would be such a nice collaboration between the two. Not only like, uh, like possibly different views of it, but coming from such a great like idea of the economy, like within shipping. Shipping is such a powerful aspect of the economy. Being able to deliver goods and services to other goods and services, that shipping of whatever it is out there. I mean, Cantillon describes it as one of the best ways for a nation to bring in wealth. Like you don't really have to produce anything, right? All you have to do is just go and pick it up from those people, deliver it to those people over there, and get in charge, like charge a fee for doing it. And you think about it, like you could be a producing nation that produces all kinds of wonderful stuff. You manufacture and ship that stuff out there to the world. But eventually the world will figure out how to manufacture those same products and they're going to do it cheaper than you. However, if you cornered the market in shipping and distribution and shipping channels and stuff like that, like that's unmatched. Like you can like once you are in that position of being able to deliver the world's goods to each other and you're charging a fee for that, like man, talk about the position to be in of all the industries out there. All right. Do you see a world dollar liquidity crisis coming? At some point, yes. At some point, I see the dollar going higher than anybody had ever once ever given it any kind of consideration for. Like I see the dollar strengthening beyond belief. However, the problem that's going to be faced at the time is literally people abandoning the dollar. Like, I know this is like so counterintuitive to think. It was just like, how can you have a liquidity crisis at the same time people are getting out of the dollar? Like, that doesn't make sense. Liquidity crisis means there's not enough money, right? Like, you're trying to find the money, there's not enough out there. Liquidity crisis, banks freeze up, stuff like that. But yet, in my opinion, we are going to see a dollar strengthen the moment that people decide that they're going to get out of the dollar, like in a profound way, not just like, oh, I don't want to hold the dollar anymore. I'm going to find something else to do transactions. And I'm talking about like getting out of the dollar completely. That means nations like China, Brazil, India, South Africa, these BRICS nations, right? Maybe not so much Russia, but definitely the others. They are writing debts that are due in dollars, right? That means like Brazil wrote it, I owe you $100 over the next 10 years, at a certain percent of interest, and they sold that debt out there to the world. And it's due in dollars. So they're going to have to come up with dollars in order to pay that debt. So this is the problem that most people end up like trying to wrap their head around is that they are not able to understand that the BRICS nations, along with all these other nations around the world, including individual people and entities and all this other stuff, is that they have written debts that are due in dollars. All those contracts need to disappear, right? Once they have disappeared, then you will start seeing the dollar moving back to the United States. However, because those contracts were being used like dollars, like literally they wrote a contract, Brazil, I owe you $100 over the next 10 years at 10% interest. That contract gets moved out there to the market, goes out there to the world, and then starts getting used like dollars itself. Literally writing a contract that is due in dollars ends up getting used like dollars in the world. So you can imagine how many dollars actually exist out there in the world. So if we're going to run into a liquidity crisis because those contracts are disappearing, pulling all kinds of money out of the system, that liquidity crisis is going to cause the dollar to strengthen dramatically. Right? Literally, people trying to get out of the dollar will strengthen the dollar. It's weird, right? But it's because of all the contracts that are written in that are due in dollars. They need to get out of those contracts. And since those contracts get used like dollars, there's a hell of a lot more dollars out there circulating than people would even don't even know how many. Right? Like if I wrote a contract and I gave it to All Nighter, the only two people who are going to know about that is me and All Nighter. Right? Doesn't mean the contract doesn't exist, right? Or is fake or anything like that. The contract still exists. And that contract is due in dollars. So now we have a contract that can get used like dollars. And I created it. Okay? And this is what a lot of people are doing all over the world. So I don't see like when I see a dollar liquidity crisis, what I would assume is going to happen is the Federal Reserve is going to figure out some way to inject liquidity into the system. Okay? Now, how they plan on doing that without sending the United States on an unsustainable debt path is beyond me outside of the purchasing of foreign debt, like foreign sovereign debt, and put that on the balance sheet and issue out United States Federal Reserve liabilities. I don't know. But no, I don't. I don't see that going away. Not anytime soon. Not until like once the BRICS nations stop writing debts that are due in dollars, then maybe we might be a little bit more concerned about it. But right now, they all those nations are all going to have to acquire dollars into the future to pay those debts back. So even the idea that the BRICS nations are trying to get out of the dollar is delusional. It's not right. They are not trying to get out of the dollar. They are trying to do transactions that are outside of the dollar, and they're not going to do a very good job of it because there's simply not enough other currencies out there to do it with. Right? Can they do it? Sure. Is there instances in which they do it? Yep, absolutely. Can they do it and continue to do as many transactions as they're doing today? Not even a chance in hell. Not even. Yeah. I mean, if they took all the dollar transactions away and say we're not going to do them anymore, they'll starve. They'll starve. Or seizing land like Rover Cleveland did would help. All right. No repeat comments, please. 6:30 Connecticut time to feed the stock. Great. Well, what did I say? Great. Well, moderated chat. Thanks. Thank you. Well, All Nighter and Brody do a great job on this channel. Like, I don't think I could have picked two better guys to, go through the comment section, making sure that it stays algorithm friendly, stays, even viewer friendly for the most part. I mean, I can't thank you guys enough for that. You make the channel so much better for that. Are we positioning ourselves to buying foreign debt? I don't know, man. It certainly seems that way when you think about the central bank digital currencies, the idea of going negative, all digital currencies or something like that. Man, it just stacks it up to make it too easy. And really, for a lot of you who might have heard that for the first time, buying that of foreign debt, that's not me making this up. All right. A lot of times people think that I make stuff up. I pretty much have a document or something to back up every single thing that I have ever said. When I do give you my opinion, I generally make it pretty clear that it's my opinion on things. But when it comes to like a lot of the stuff that I talk about when monetary policy and everything, it's I have a backup for everything. Right? Deflation, making sure it doesn't happen here. This is a Ben Bernanke speech from November 21st of 2002. If you can believe this. This is like 23 years old now. Oh, wait, it's like way back there, right? The old way back machine. Okay. So in this speech, the Fed said this. So we understand like the Federal Reserve needing to inject money into the system, right? Like if the economy becomes illiquid, the Federal Reserve makes it liquid. Being liquid means that if somebody has like a US Treasury or a house or something that they want to sell, there is going to be an ability to buy that or sell that or have a loan for it. Ultimately, the liquidity is what's making the system move, right? Because here's the thing, you can have a US Treasury and it can work just like a dollar does, right? A U.S. Treasury. I mean, I can hand it to you. Some people like, you might be willing to accept it. A lot of people would be to accept it as cash. In fact, when it comes to doing world trade, a fair amount of it is done with U.S. Treasuries, like the majority of it. And so to understand these U.S. Treasuries are acting like cash, there will come a day in which that Treasury comes due. Then what do you need? You need the cash, right? Because cash is the ultimate settler of debt payment. So understanding that the cash is like literally the lubrication for the system. Does that make sense? I know it's a weird term to use, but that's what the bankers say, right? That's how the bankers say it. And that's the easiest way to understand it is that not always do you have to do a transaction in cash, but there are times in which that contract comes due and then you need cash to settle the contract. This is the lubrication for the system. And so understanding that if you are in a position in which that you need to figure out how it is that you are going to create this liquidity to get out there to the system, this is a problem when it comes to the Federal Reserve because the Federal Reserve is in a position in which that when they try to inject money into the system, they are doing it through the purchases of US Treasury debt, right? So they don't go to the government directly. That would be illegal. They would be monetizing the debt. They can't do that directly, even though there's a lot of argument against that. What the Federal Reserve does is they go to the primary dealers. So the big banks, JP Morgan, Goldman Sachs, those kind of guys, they go to auction and buy the treasuries, and then the Federal Reserve buys them from the big banks. So what the Federal Reserve is buying is something that has already been purchased. Right? And this, again, is important to understand because the Federal Reserve can't directly buy from the Treasury. That's called monetizing the debt, right? Even though they're buying U.S. Treasuries, giving the money to the big banks, and the big banks are handing it to the U.S. Treasury. This little roundabout way of going about it is technically legal. Okay. So anyway, knowing that the Federal Reserve is using U.S. Treasury debt purchases in order to liquidate the system, right? So they buy treasuries and they put that cash out there into the system. The Treasury goes on their balance sheet, and sits in their vault. The problem with it being is that the next time they want to go and inject all this money into the system, they go to buy all these U.S. Treasury debt. The United States government falls even deeper into debt. Moody's downgrades their credit rating even more, and now they are sucking high tip because nobody wants their U.S. Treasury debt, and everybody's dumping it out, right? So this is a problem that they would end up facing. They don't want to put the United States on that sort of unsustainable debt path. Right now, it's not unsustainable debt path, or it's not unsustainable debt yet. It's on an unsustainable debt path. All right. So how it is that they plan on getting the United States out of this unsustainable debt path is beyond me because I don't think that's possible. But they do have an ability to inject money into the system in other ways than purchasing that of U.S. Treasuries or even mortgage-backed securities. This is coming directly from the Federal Reserve's Ben Bernanke speech that he gave 23 years ago. It says this: the Fed can inject money into the economy in still other ways. For example, The Fed has the authority. They don't have to look for it. They don't have to ask for it. They don't have to get a vote from Congress or anything. The Fed has the authority to buy foreign government debt as well as domestic government debt. See, they buy domestic government debt all day long, U.S. Treasuries, mortgage backed securities, but they have the authority to buy foreign government debt. Potentially, this class of asset offers a huge scope for Federal Reserve operations, as the quantity of foreign assets eligible for purchase by the Fed is several times the stock of U.S. government debt. You hear this? Like, once the Federal Reserve has put the government on an unsustainable debt path where they can't be buying their U.S. treasuries anymore, they already know there's a whole class of assets out there that would be several times the stock of U.S. government debt, offering a huge scope for the Federal Reserve's operations. Hasn't happened yet, but I would imagine that at some point in the future, we can expect that to take place. And again, this is coming from Ben Bernanke 23 years ago, right? So if it was to happen, people would be like, nobody saw this coming, and it would be like, well, wait a minute, no, that's not true, right? I mean, there was some people who saw it coming. Right? Ben Bernanke did. He was like, well, once we run out of the ability to buy U.S. government debt, because those guys are going to be like, we're going to have to buy U.S. or we're going to have to buy foreign debt. All right. Mike, I don't know anything. Bonds in McDonald's or Intel. Uh, Brody, you don't control the value of the currency, do you? What does that mean? All right. The currency doesn't have any value to it. Like, this is another thing. It doesn't. To me, it's like the purchasing power or whatever, the dollar is falling, and I'm like, yeah, that sucks, but then again, it doesn't hold purchasing power. Why would I expect it to? Like, I don't expect people to do things that they don't do or can't do. It was just like, you know, you put me in with some MMA fighter or whatever, I'm gonna get my ass kicked, right? I don't know how to fight MMA. I certainly couldn't go up against a trained fighter or something like that. So I wouldn't expect to do very well in that environment, right? But I can sit here and debate. I can debate all kinds of people, right? In fact, I'll debate some of the highest end people out there. I don't care who it is. Put them up, man. Let's go for it, man. I'll debate anybody out there on monetary policy. I don't care who it is. I don't care. Like, you could put anybody in front of me. I will debate monetary policy. Right? So that's the difference inside of it, right? When you expect the dollar to perform, well, that would be like, hey, why don't you go in there and fight that MMA dude? It's like, I can't, right? I mean, I'll try, but I mean, I might be able to run around the ring. I might get a lucky shot, but for the most part, I'm just gonna get my ass pummeled, right? Because that's just how it is. It's just, I can't expect it. You can't expect me to do something I can't do. Right? Very much like the dollar. You can't expect the dollar to hold on to purchasing power when that's not what it does. It does transactions. That's it. It'll transact goods and services to other goods and services. And the moment that you ask it to do something else, it will fail. Because that's not what it does. uh, you say that, but every time I try to debate you, ignore my comments. I don't know what you're saying, H. Where's your comment? I don't even see it. AH is nowhere to be found, bro. Like, I just went back 50 comments. You're not there. Okay. Is the is the tail wagging the dog when it comes to banks and the bond rates? It seems like the powers to be intentionally trying to sink consumer confidence. Okay. I don't know what it is that you're looking at, but yes, they are trying to erode the confidence and elevate inflation expectation. Now, I don't know if necessarily the eroding of confidence is necessarily like the part of what they are trying, like erode the confidence, as much as they're trying to elevate the inflation expectation, which erodes the confidence, right? So like you could say, hey, look at the confidence is eroding. Why are they doing that? And I'm like, well, that might be secondary to them elevating the inflation expectations, which erodes the confidence, right? Now, when we raise the inflation expectation, what else do we do? If we raise the inflation expectation, we're going to raise something called the neutral interest rate. This is the rate that is neither accommodating nor restricting the economy. It's when the Fed is neutral, right? So when we think about it in this fashion, if the neutral interest rate is moving up on account of an elevated inflation expectation, it restricts the economy less. I know that sounds funny, but if you have elevated inflation expectation, which raises the neutral interest rate and the Fed stands still, the neutral interest rate gets closer to that Fed funds rate and the economy becomes less restricted. So, yes, the idea that they are purposely trying to do that is absolutely correct. Is it to undermine the confidence of the people? No, I don't think so. I just think that that happens as a result of elevating the inflation expectation. Fear, uncertainty, and doubt will create a lack of confidence within the system. So when you look at it and say, hey, all this fear, uncertainty, and doubt is creating this lack of confidence, right? It's eroding the confidence. And you can say, why are they doing that? And I'm thinking, well, that's what you're thinking they're doing. I'm thinking they're taking the fear, uncertainty, and doubt, raising the inflation expectation to raise the neutral interest rate. And secondary to that is the fact that confidence gets eroded from it. The moment that you alleviate the problems, then all of a sudden confidence comes roaring back. Right? Well, some people were like, cool, man, yeah, I can play the game. I'll be jumping back in. Why not? Yeah, but as soon as the war is over, as soon as the credible threat is over, whatever, all the confidence comes roaring back. All right. Um, H, we would appreciate another rational joining does highlight your handle. Well, interesting seeing Bitcoin following the M2 money supply. Yeah, somebody else was mentioning that too. And, you know, it's kind of interesting to think about like quantitative tightening and then increasing of M2 money supply at the same time, because really like these two are seemingly counterintuitive to each other as far as like, you know, one going down and the other one going up. But M2 money supply is consistent of a lot of things outside of just cash, right? So knowing that like when you have a situation in which that the Federal Reserve takes maturing debt and then rolls that back over into new debt, this right there, that concept has a lot of people believing that the Federal Reserve is expanding their money supply, like increasing their operations or something of that nature. And in a lot of ways, it actually is. You know, when you think about it, it was just like if you're not removing the money, then you're keeping that money out there. This is the problem that we were facing, was too much money being in the system and essentially allowing this money to be out there. We should allow more debt to roll off the balance sheet, bringing in ever increasing amounts of dollars and stuff. But right now, when we are in a position in which that if you were to do that, the banking system would have a harder time issuing out loans, you know, operating within the economy itself. You have liquidity issues or tightening up or, you know, financial conditions or something of that nature. When you have like an M2 expanding like it is, how is it that the people are feeling about this rolling over of mortgage or of mortgage-backed securities and US treasuries back into mortgage-backed securities and treasuries, giving this like kind of false idea of quantitative easing, right? The people's reaction from that are not too far off from what you would see from it. Now, here's the thing I have to ask the question of how long will this last? Right? Like Bitcoin's incredibly volatile, and we have a very unique situation. So when the unique situation is eventually alleviated or, you know, dissolves away or whatever happens in the next 6 months or year or whatever takes place, right? What will we see happening with Bitcoin? Will it be acting on its own independently, like a lot of times it does, you know, being as incredibly volatile? And volatile as it is, it jumps all over the place, or are we going to continue seeing it follow the Fed's operations? Like it just could be very unique timing. Okay, maybe it's not. Maybe it does have a correlation to it. Time will tell. But I personally, I have very low expectations of Bitcoin. Like literally, I have none. Like almost no expectations of Bitcoin going anywhere, doing anything, performing in any way. Like I have no expectations of Bitcoin. I've been dollar cost averaging into Bitcoin for a very long time. Like a long time. I don't even know. 7 years or something. Like I don't even know how long I've been doing it. It's a long time. And Bitcoin has by far grown to the biggest position out of everything that I have ever put any money towards, except for maybe my house, the real estate of my house. But Bitcoin is absolutely dominating everything. All the stocks, all the gold, all the, all the silver, all the stuff that I've ever done, Bitcoin is just screaming it, right? Like makes everything else look insignificant. And that is off of zero expectations from it. Dollar cost average into Bitcoin from now on. $50 a week, $50 a month for the rest of your life. That's if it comes to Bitcoin, that's my only suggestion. I don't know what you plan on doing with it at the end of the road. $50 a week forever or once a month. And this isn't really something, and here's the thing. I didn't get this strategy by making it up or something of that nature. I went directly to Lynn Alden. Alden was there. It was in Miami. I think weren't we in Miami or something? I can't remember exactly. Maybe we were here in Orlando. I can't remember. Right. But I went right to Lynn Alden. I said, Lynn, how do I time the market? How do I know when the best time to buy Bitcoin is? And she told me, you can't time it. You have to dollar cost average for 4 years. Even if you start at the top of the market and you dollar cost average for 4 years, there is no economic model that they have traced back where you would be under. She is saying if you dollar cost average for 4 years, there is no economic model in which, from Bitcoin history, which isn't very long, that you would be under. I absolutely killed it in Bitcoin following that strategy. I didn't think about anything else after that. I'm like, okay, Lynn, that's the only advice I needed. Dollar cost average in the Bitcoin's the only way to do it. You got to do it for 4 years. Killed it. Absolutely killed it. Did wonderful. I don't even know. Like I have, I forget. It was like 180%. I don't even know what the returns are. It's just like it's so much. It just blows me away. Right? And again, this is off of no expectations and no real hopes or dreams or beliefs that it was going to do anything other than just be the cryptocurrency it is. I didn't think anything of it. So, I mean, I don't know what else to say other than I'm going to do another 4 years dollar cost averaging, and then after that I'm going to do another 4 years, and I'm going to do another 4 years, and I'm just going to keep doing that for the rest of my life. Having half a Bitcoin right now is making me feel really good about the position that I have taken over the last few years buying bits and pieces of Bitcoin. All the rest of the stuff, I mean, it's cool. Like I like the gold and silver. It makes me feel good to have it. Gives me the ability to sleep at night. But I have very little expectations that gold and silver are going to be flying to the moon. Not like the Bitcoin has done, and I don't have any expectations of Bitcoin. So if it continues to do what it's doing, I think I'm just perfect. It's going to be perfect. Right? I'm perfect. I don't know how to say it. No, I don't know. Right? You will have $1 million by the time you retire. I don't. Maybe. Again, maybe. I don't know. Like I'm just like if I was to ask Lynn again, it was just like, what is it that I need to do with Bitcoin? And if she was to tell me the same thing, then I guess that I'm just going to continue down that same path. Like I don't know why I would change that. If the internet crashes, bye bye Bitcoin. Now, if the internet crashes, you can say bye bye to everything. You're gonna lose all your food. You're gonna lose all your communications. You're gonna lose all your services that you would ever depend upon the government. You're gonna lose all that stuff. If you lose internet, you're gonna lose it all. Right? So, yeah, Bitcoin. If in fact I'm cool with it. If the internet destroys Bitcoin, then gold and silver will go to the moon. I'm cool. Right? That's what I'm saying. I've taken a position in which that no matter what happens, I'm going to be prepared to try and deal with it. Now, whether or not I am prepared to deal with it, I don't know, but I'm going to try. Right? And I've thought about it, and I'm not like, delusional to the point that says it'll never happen. But then again, I don't really think it'll ever happen. Like that complete collapse of the system or something of that nature. I don't think there's going to be a complete collapse of the power grid or a complete collapse of internet or a complete collapse of any of that stuff. I don't think there will. I don't incorporate it into my daily strategies or anything like that. Have I taken a position if it happens that I would be somewhat prepared for it? Yeah, absolutely. But I don't put my entire life into that, right? I put a very small section of it. I wanted to do the same thing with XRP, but I don't know if it'll be there. I like Bitcoin. MWriter777, there's nothing else out there. It's just Bitcoin. Right? There are other cryptocurrencies out there, and don't get me wrong, there's some really good projects, and there's probably going to be some that are going to be very, uh, how can I say, very popular in the future. But really, There's nothing that these other coins are doing that Bitcoin can't do, right? Or is going to be able to do in the future. Like, so to me, like, there's nothing else. It's just Bitcoin. Everything else is secondary to it. Not saying that those other coins won't do well. Like those projects will do well. What it is that they are performing as far as the services and the industries that they're building around it. I think all those are going to, well, not all those, but some of those things are going to do quite well. But really, there's nothing else out there but Bitcoin. It's just it. Everything else is secondary to it. And it's really just because of the security level of Bitcoin. I mean, how many miners are there across the globe? If you were to do a 51% attack on Bitcoin miners, it would take so much computing power and coordinated effort, and it's just like it's such a far off concept that it wouldn't even be possible, right? I mean, is it possible? Sure, but it's just like a far off distant possibility. So I don't stress it. There's nothing else but Bitcoin. That's it. Yeah. And I do own other cryptocurrencies, by the way, right? I have alternate coins. I bought heavily into Litecoin for a long time. I have a bunch of Litecoin. So I'm not one who's like exclusively Bitcoin only, but I really just don't see where anything else is comparable to Bitcoin. Right? Bitcoin is it. All right. Obviously, we know that debt is unsustainable. What if they reset the financial market is as we know it? Well, that's a huge what if. What does that mean? Reset the financial market. That means all debts don't need to be paid. Like if I have a house loan, do I have to pay my house loan? Or do I get to keep the asset, the house? Well, what if somebody has the asset that is the loan, right? Like I don't own my asset. I don't own the house. Somebody else owns the house, right? So do they get the house? And I just miss out on all my payments that I made, right? Because somebody else owns that asset. Here's another one. The debt itself is an asset, right? US Treasury debts, a bond, a 10-year bond is an asset, right? It's also a debt, meaning that if the debt doesn't get paid, the asset disappears. So here, if I'm retired and I'm loaded up on Treasury bonds for my retirement, and what you're saying is that we have to have this financial, how'd you put it? Uh, Reset, right? This financial reset. Does that mean all those treasury bonds don't get paid? Well, what happens to all the retirees? They go hungry. What about all the insurance companies, all the corporations, all the people who are backing up all their stuff with U.S. Treasury debts? Gone, right? They don't exist anymore, so they go out of business. Right? You can't just make the debt disappear. It doesn't work like that. You can't. We are a debt-based currency system. If you make the debt go away, we fall into pain and misery instantaneously, and we all starve, right? Because we're using debt to buy the production of the world. When the world sent us their hard work, labor, energy, time, resources, and we trade them paper promises to pay them in the future with more paper promises. You don't want a reset of the debt. If we had that, it would be horrible. I mean, don't get me wrong. I'm sitting in a position of gold and silver and Bitcoin. I mean, those assets would probably go through the roof, right? I mean, it would be worth so much money that I would be able to buy cities, or whatever. But that's not something I would be looking forward to. It would be a horrible economic environment. I'm here, want to get the door. Oh, all-nighters here. Was that you knocking? I can barely hear you. What up, brother? In the middle of it.
I'm gonna make it quick.
Is anybody here?
I got my stuff hanging out.
Oh, did you? Oh,
Yeah.
is it downstairs or right outside? What?
It's right outside the door.
Oh, is it? Well, sure, bring it in, man.
Where are we here?
Got all-nighter here.
Hello, everyone. How do I look? I'm not on camera yet. Still not on camera.
There you go. So there's a bit of a lag there
Yeah,
going
there
on.
it is.
Right on, man. It's good to see you.
Market disruptor shirt
I love it, dude. That's
Mark.
great. Yeah, perfect.
while traveling.
Yeah?
I'm gonna grab my stuff.
Yeah, go grab your stuff, man, and we'll head down to the... What time does that party start?
Think 8.
Oh, at 8? Oh, shit. Okay.
That's what I heard.
So it's still a little ways out. Simon, I agree with you on gold and silver, but Bitcoin, no thanks. Yeah, Pedro, I get you, man. Like, again, man, you see the importance level that I put on Bitcoin? It's really low. Like, I mean, I'm much more into gold and silver, and I would much rather have gold and silver, and I'd rather talk about gold and silver and mining stocks and all that other stuff. But really, what it comes down to is that Bitcoin has kicked ass. Right, all-nighter? I mean, it's just like, I didn't want it to. I want gold and silver to kick ass. That's what I want. But it doesn't matter what I want. It doesn't matter what I, wish and hope and dream for. The only reality of the situation is that it's done far better than anything else I have, including Coinbase, like the Coinbase stock that I had purchased. I mean, I dollar cost average into that over the last 4 years as well. It's up like 180%, like way better than any other stock that I had purchased. Like, cryptocurrencies kick ass. Everything else is just kind of, All right. Hey, Cody, great to see you here. Where's the car? It's back home. I'm in Orlando right now. Got all-nighter with me here too, Cody. So.
Yeah, we should have brought some kind of cardboard cutout of a vehicle.
Oh yeah.
That would have been fun.
This is Simon's new Camaro. All right. How is it possible? How is it possible to pay back that much debt? Looks like 10 trillion to be refinanced in Q3. I don't know. That's the same question they've been asking since I was a little kid.
I don't think it's meant to be paid back.
I don't think it's going to be paid back.
I think
Yeah.
it's just meant to be sustainable, just to work.
Yeah. I kind of agree. Like, I don't think there's any chance that there's like a payback that's going to happen with it. I think it's just, forever expansion and, short, brief moments of pullback.
And I do remember hearing as a kid that the national debt wasn't supposed to be paid back in dollars or Federal Reserve notes. It was supposed to be paid back in some kind of reserve, or not reserves, oil or some kind of resources. Not so much in Federal Reserve notes. I don't know how much truth there is to that. That was when I was a kid, way before I was studying economics.
Right. And that was probably like some promise that they made so we would all be convinced to use it, So,
Some offshoot of the petrodollar.
yeah. All right. You mark my word, one day the actual owner of Bitcoin is going to dump all their coins and it's going to plummet. And we still don't know who owns the majority of the coins. Well, Nathan, let's take that into consideration. That's actually a good argument. I would like to kind of expand on that one too. So let's just assume like you have somebody out there who has like a lot. Like let's say they have 10 million coins, all right? And all the other 11 million coins that are essentially out there, not quite all of them, but another 10 million are out there in circulation, which has created this elevated price like we are experiencing right now. So they dump those 10 million out. We're going to crash the system, right? Because obviously 10 million coins, you double the supply, boom, right? You have this huge drop in it. Now, when you think about the position that a lot of people have taken with Bitcoin, like all-nighter, I don't know if he still has it. We talked about it in the past. I have almost a half a Bitcoin. I think he has about a half a Bitcoin. So between the two of us, we have one Bitcoin. That's something that less than 20,999,999 people are going to be able to do. right? Less than 20 million people are going to be able to do that. Like literal, or 42 million people, I guess, could do it, have half a Bitcoin.
Right.
But then that's it. That's as much as you can ever possibly get to. 42 million people doing it. So even if you were to flood the Bitcoin market with double the amount of supply, you are going to crash the price for a time. But what you're going to end up finding is that that distribution of Bitcoin going hoarding off into other people's hands is going to limit the amount that is out there, and you're going to be back in the same position where we are today because it's a limited currency. Like it will disrupt the market for a time, but then after the equilibrium is found, whether it takes months or years or however long, then we'll be right back in the same position because it's a limited currency. It's not like it's ever increasing the expansion of the supply. It would be a one-time shot. What are they saying? What are you
Cody's saying, just talk on the stream.
What is it?
I'm still typing in the comments.
Oh.
I have a comment addiction. I'm a comment creator.
Oh, I see here. Instead of actually saying the words.
I look like a 13-year-old girl on my phone.
Yeah, and how's your Bitcoin are you wanting to argue Bitcoin? Like, I don't have any argument for Bitcoin. I don't have any expectations of it. So, like, there's no point in arguing. Therefore, price going to react when the government block BTC nodes. And okay, see again, what you're suggesting is a hypothetical situation that doesn't exist. I mean, what happens when the government comes and says they're going to take all your guns? Right? I mean, I'm not that worried about it. Some other people might be worried about it, but I have a constitution in one hand and I'm on the other side of a locked door on the other. I mean, good luck. Right? That's as far as I don't. You can threaten to take them all day long. I am not worried.
Yeah, and it's peer-to-peer, so it can rely on a mesh network. It doesn't need to rely on so much the internet itself.
Right.
As long as there's a connection, a physical connection, or even a Bluetooth connection.
You can still make a transaction occur. Yeah. And then eventually upload that up to the data,
Right.
to the blockchain.
And I imagine there's so many huge Bitcoin holders, they would do something. They'd spend some Bitcoin to make it happen.
Oh yeah.
To reignite some other kind of energy source or something like that.
Well, I mean, for sure. Like all the limitations when it comes to this stuff. I mean, it all comes down to hypothetical situations that most people are concerned about. You know, losing the power grid, government control, something of that nature. Ultimately, like I don't think Bitcoin will ever work as a currency because I take it even farther back than that and call Gresham's law, right? And it was like basically if you have two currencies in system, a good currency and a bad currency, the bad currency is going to drive out the good currency. So if Bitcoin was to try and take over, it wouldn't happen because the fiat currency or any other currency out there that's being used would then pretty much take over all the transactions. And here's a good way of understanding it. If you had a gold coin in one hand and dollars in the other, and you came to me and you're like, hey man, I want to buy that computer you have right there. And I said, sure, you can buy the computer. What do you got? And you're like, I got gold in this hand and cash in the other. And I'm like, I'll take either one of those. Are you really going to hand me that gold coin? Are you really? I mean, I don't know. H might hand me the Bitcoin, but most people would end up holding the Bitcoin, holding the gold, and give up the fiat currency because they know fiat currency is going to be worthless, loses purchasing power over the future. They don't want the fiat currency, they want the hard currency. So the hard currency gets hoarded and the bad currency, right? The good currency gets hoarded and the bad currency goes into circulation. It's what's actually purchasing the computer. And so I know that Bitcoin isn't going to take over or be a functional world currency so long as you have dollars in the system doing the majority of the transactions. That's really what it comes down to is Gresham's law.
Yeah, currency circulates because it's not wanted.
Yeah. Isn't that funny? It really is. It's just like it has confidence, but really it's not wanted. If you wanted it, then you wouldn't get rid of it.
Yeah, the trade is wanted.
Right? What you want is the goods and services that come from it. And that's why I say, like, the money isn't really meant to hold value. It's just meant to trade goods and services for other goods and services. You got to take it and trade it for other things that hold value, gold or Bitcoin or real estate or something of that nature, All right. What are we doing? Man, I've been going for like 2 hours, bro. Should we go down, hang out at the lobby, see if anybody else shows up? All right.
Let's see what time that thing starts.
if we lose power grid, then we have
Bigger problem.
much bigger problems than what you are going to do with your Bitcoin or how to spend your Bitcoin. Life will go back to 500 BC. All right. Found you live again. Cheers and enjoy the holiday weekend. Well, thank you, Andrew. I appreciate it. 121 watching. Yeah.
Oh, yeah. Party started an hour ago.
Oh, did it? Well, let's go down there and hang out. All right. We're going to go down and hang out at the Rebel Capitalist cocktail party. Maybe we'll fire up the live stream while we're down there and hang out. Maybe we'll get All-Nighter to do it on his channel.
Yeah, that'd be fun.
All right. So you guys can check out, see what the Rebel Capitalist kind of like pregame show is like. George puts on this cool cocktail party where, pretty much all the guests get to come and hang out and mingle and do a meet and greet. And then tomorrow, the speakers begin.
Yeah, then it gets daunting.
It's funny. We were talking about this because I'm gonna go visit my sister after the Rebel Capitalist. She lives here in Florida, and it was funny because we were talking about by the end of the weekend, it's like it's a mental drain. It's tough. It zaps a lot out of you, especially if you're,
and physically,
and physically, yeah, you're just drained by it all. It's really good, but I think just having that much information pushed on you for 16 hours, 2 8-hour days straight, it's a lot. It's a lot to handle and take in. It takes like a day to recover from it.
Yeah. It's like drinking straight espresso versus just coffee.
Right. Cool. Yeah, let's go down.
Yeah.
All right. See you guys.
Thanks, guys.
Uneducated Economist, you let me know. We'll talk to you here in a little bit.